Good afternoon, and thank you for joining us for today's webinar, which we've entitled Ethics, Staying Compliant or Creating a Culture of Ethical Behavior. A very intentional title as we weave some conversation in around today. This idea between an organization being compliant for the sake of compliance versus being compliant because we create a culture of compliance and accountability. So we look forward to this conversation today. My name is Mike Hoffner. I'm managing partner at McKonly Asbury. And joining me today is Janice Snyder, partner and director of our assurance services here at the firm. Many of you have joined us for our annual ethics webinar before, so you will appreciate some of what the next hour will bring. But for those who don't know us and don't know the firm, we're delighted to have you here and delighted to have you joining us today for the presentation. McKonly Asbury is a wonderfully assembled team of accountants and business advisors serving clients across the Mid-Atlantic and frankly across the country from our offices in Camp Hill, Lancaster, Bloomsburg, and Philadelphia, Pennsylvania. Our firm offers a wide variety of services, including traditional compliance, as well as a lot of specialty services, including things like SOC and cybersecurity, specialty focus on internal audit and affordable housing services, a lot of things that we do that, frankly, we'd love the opportunity to speak with you about if you're currently not a client of McKonly Asbury. And for those who we do consider to be wonderful and trusted clients, we appreciate you being here to join us as well. The only other thing I'll mention on the firm before we launch into our topic of the day is I'm really excited to embrace and announce the fact that we've once again been identified as one of the best mid-size accounting firms in the country to work for. Something that we work really hard to create a culture that is engaging for our team because an engaged team serves their clients well. And so excited to announce that we're again on that list, as well as being named to the Inside Public Accounting IPA 300, largest 300 firms in the country. And so when those two things go together, it's an exciting story. And so really glad to share. So Janice, I'm going to turn it over to you to lead us into our conversation.
Great, thanks, Mike. The first thing we have here is our first polling question. So the questions will come up today, but you can also submit questions through the built-in chat feature here. So submit them. We love your questions. Mike and I have been doing this for about a decade now, and we love the dialogue and the conversation, and that is the fun part of this. But the first thing you have to tell us is, do you wish to receive CPE for attending today's webinar? We'll just give you all a moment to answer that. And as you do that, so you answer this question, but there will be 4 polling questions today. You need to answer all 4 of those questions as we go through this. So, but as we said, this will be a conversation today. Hopefully, as you get your required CPE ethics today, you can have a little fun with us. So just about everybody does, but it is good to see that a 1% that is joining us just because they are interested in this topic. So that's
We're
good to
grateful for that 1%.
All right, excellent. So let's move us through our agenda here today. So we're going to start out with a couple of ethics in the news, some of the key headlines out there. Mike's going to start us through review of the AICPA Code of Conduct. And with that, I'm going to touch a little bit on the 7 threats there. Current trends in enforcement, AICPA disciplinary actions, and then creating an ethical culture. So that's what we're going to touch base on in a little under an hour here. We've got plenty to talk about, so let's get started. So ethics in the news. Mike, we've done this for a long time, and for many, many years, we talked about Bernie Madoff and Enron, but I thought it was a little more fun this year to look at what's some of the newer stuff that's happening. Did a lot of research on what are the top 50, top 40, top 30, top 10 ethics scandals. So we finally moved out of things that are a decade old, and I got to share here with you on the next 2 slides what I deemed in the last 5 years, we'll say. You see one of them there, the E&Y scandal starting in 2017, but things that have mostly been settled in the last 1, 2, 3 years that have hit the news. And I think some more interesting things to talk about, but why are these so focused on ethics? And a lot of these really focus on what did leadership, what did tone at the top, what did people ignore, what did their inaction result in, or why did they think their profit motives or what they were doing allow this to happen? For example, E&Y are paying a $100 million fine after auditors cheated on the ethics exams. So in this case, you see here from 2017 to 2021, there were 50 E&Y audit employees that shared answers on the ethics portion of the CPA exam between 2017 and 2021. So with hundreds more cheating on internal CPE courses, so sharing their answers, sharing their responses. The interesting piece of this, when you look at how the SEC looked at this and their investigation and when they went through this, they said that a significant number of E&Y professionals did not cheat, but those individuals also did not come forward. They kind of turned a blind eye. They did not take action, and a lot of leadership knew that this was happening, and they didn't do anything about it, and they allowed this to continue. So we're going to touch base on this one a little bit more in the presentation, but E&Y also went one step further as leaders and denied that the issue existed and continued to not address that. So we're not going to touch base on every one of these, but one other one on this slide, McKinsey, you see the headline there that is one of the more recent ones from August 2nd of a $78 million settlement. But if you see the fine print there, they paid out nearly $1 billion in total to settle all of these claims. And McKinsey still continues to maintain that their past work was lawful and denies any wrongdoing in this case, because what they really did was work on strategies to turbocharge, if you will, kind of the OxyContin sales. And they were working with several pharmaceutical providers, sellers of that, particularly Purdue Pharma was one named in several lawsuits. And they were trying to get to increase their sales. So, you know, that's a reasonable project. They were doing excellent marketing and revenue strategies, but they were targeting physicians that they believed would overprescribe these medications, ignore some of the restrictions that were out there, and give higher dosages of these medications, which resulted in a lot of people becoming addicted to these medications, and certainly had a pretty significant impact on tens of thousands of families and individuals and on their livelihood. So they said that McKinsey encouraged Purdue, also while under investigation, to delete documents during this process, and that McKinsey did not act in an ethical manner that resulted in many people's lives being harmed. So a lot of this is about ethics. I mean, on the one hand, you could say McKinsey was really good at their job and was very successful in increasing those sales, but in the process, they harmed a lot of people. So we're not going to touch base on all of these cases, but they're really interesting studies if you want to take a look at them and keep this slide and go look at the Theranos, their CEO there, and how they defrauded so many investors, and Luckin Coffee, certainly a rival to Starbucks. But you can look these up. These are more recent headlines. But I'll go on to the next page. Mike, do you want to touch base a little bit on the collapse of FTX? I think we've all heard about that more recently.
I very much don't think we have time in our webinar today to really talk about any of these at the depth we'd love to. But what these get to, as Janice said, it's a concept of tone at the top and creating, again, our culture of ethics versus just doing what is compliant and right. And the FTX collapse, for those who have not really paid attention to it, it's one of those stories that I find fascinating, and I think there is so much more to it and so much more depth for us to understand. But I'm also, I guess, foolish enough to think in a culture where we move from one thing to the next, and the next scandals are already coming out. I don't know that there will be the expose of really what went into some of these things. I always say I'll wait for the book, right? When there's a massive fraud, we'll wait for the book. And with the frauds in the early 2000s. There was always a book. I'm not confident, Janice, that these more recent ones are going to stay on our radar screen for long. So we'll talk about them, and we'll talk about some of the flaws. And for those that did not pay attention to the FTX collapse, Sam Bankman-Fried started FTX, a cryptocurrency exchange, in 2019. So mark that date, 2019. And by January of 22, the company was worth $32 billion. And it was a real simple platform, a simple exchange for crypto trading and acquisition. So January 22, worth $32 billion. And in November of 2022, so a mere 11 months after that high point, what looked like an accounting oversight or a discrepancy very quickly was exposed to be a major fraud. Billions of dollars lost when balance sheets started to be understood and produced. Now listen to this, accountants who are on the call, balance sheets that showed $9 billion in liabilities and $900 million in assets. So do the quick math there, and we're kind of going the wrong way on where the liabilities and the assets are. But really what happened is we had an individual or a team of individuals who had extraordinarily large egos, invested in multiple and started multiple entities, and there was a lot of trading and funneling of assets and cash from one entity where customers, clients were investing in crypto into a related entity that nobody really knew was related and nobody really knew where the cash was going to support some of the investments and operations over there. And really, ultimately, again, we could spend 20 minutes on this and we have a lot of slides, so we won't. But ultimately, we had individuals who were creating a massive fraud, a massive scheme to achieve their own egotistical desires, their own desire to be in this upper echelon. And so Sam Bankman-Fried was spending the funds that were at risk here on personal luxury items, elaborate advertising campaigns, supporting political donations of candidates that he wanted to be close to and involved with. So just I like this one, and I want to dig into this one more as more information comes out, simply because it is an ego. It is an ego-driven fraud, and I'm not sure some of these other ones that we're talking about today are ego-driven. There's always ego involved, but this truly was an ego-driven fraud. And the best quote I read, and I looked it back up before this, and then Janice, I'll get off of this one and we can move on. But the article ended with this simple statement. It said, here's the bottom line: investing in a phone app in an unregulated company in the Caribbean may seem paradigm shattering to a new investor, but buyer beware. Like, that's essentially, we're moving so fast and we have new ideas and we didn't stop and look under the hood. So I'll give it back to you, Janice, and otherwise I'll go another 10 minutes on this one.
That's all right. We could talk about all of these at length, but I'm just going to touch base quickly, Mike, on the Boeing. That 737 MAX fraud, that conspiracy there where they paid over $2.5 billion. So I remembered hearing this one in the news, and when you hear it, you're like, oh yeah, that did happen. If you remember, in late 2018 and then again in early 2019, there were plane crashes, and in total between those two crashes, 346 passengers died from these failures here in this Boeing 737. And I remember that hearing and flights getting canceled when each of these happened, and all the 737s being grounded when the second one happened, and kind of chaos across the airline industry, and these fatal crashes and all the lives that were impacted. But this actually, the settlement and this 2.5 billion was reached just in July of 2024 with the headlines here, and Boeing ultimately pled guilty to criminal fraud in this case. And it was that there were a lot of flaws in their design and in their flight control systems, and a lot of red flags, a lot of things that they should have known, and a lot of failures that were happening along the way. But in the case and in the settlement, when they pled guilty, there's actually coming forward that they deceived the FAA along the way about what was happening in their flight control systems. So they knew that there were failures. They knew that things weren't going as planned. I mean, I'd like to think they didn't know that people were actually going to die, but they did know that things were going wrong and that they probably shouldn't have moved forward. I don't know, was this a case of corporate greed? I mean, certainly there was revenue on the line, there were sales on the line, there was their business on the line, and they proceeded, and 346 people died, and it ultimately cost them $2.7 billion. So certainly an unfortunate case, certainly corporate greed. We could talk about all of these at length, but certainly sad cases where ethics did not prevail and people did not do the right thing. So we will move forward. to the next one, some of the themes here that Mike and I both touched base on, these ethics scandals, underscore themes in the corporate world. We said greed, lack of accountability, ethical lapses. I certainly think of tone at the top. You see something, say something, speak up. And I'm sure in all of these cases, there probably were individuals along the way that tried to do the right thing. I would like to think so. Or that tried to speak up, or that said, hey, this isn't right, or that resigned. We probably will never know all of those details. Maybe the books will come out about FTX. But all those little details happening behind the scenes. But you certainly would want that culture of ethical behavior that would allow individuals to come forward. And the cost is huge. I mean, the ones that didn't do the right thing in these cases, lives were lost in some cases, $2.5 billion fines, even just cheating on an ethics exams, $100 million. There's financial losses, legal repercussions, were a catalyst for change, and a lot of these things, regulatory changes and reforms, but real financial dollars, and in the extreme case of Boeing, loss of life because people didn't do the right thing. So hopefully there's a lot of lessons that you just don't want to be following the rules, or in some of these cases skirting the rules or on the edge of those rules, but you really want to create that culture of maintaining ethical standards, fostering transparency, and ensuring that you're always trying to do the right thing in your business practices. Anything you want to add to that, Mike?
Nope.
All right.
Nailed it.
So this does take us up to our second polling question. So, which scandal caught your attention when it was in the news? And I realized we only talked about 2 of these. Mike, which one of these caught your attention?
Well, I lean towards the FTX one, but I will tell you, Janice, the Boeing issues caught my eye in the news because I do tend to travel a decent amount, and every time I get on an airline and happen to notice that I'm on a 737 MAX 7, I think about this, and so it stuck with me because a lot of us travel and we trust, right? And so when we travel and trust and find out that not only was there an issue, look, accidents happen, but when an issue is a result of a cover-up or greed, or I lost my life savings because I invested in something that was driven by greed, not reality, I think about those things more than maybe, did cheating on an ethics exam hurt me personally? No. Do I think it's terrible? Yes. But I focus on the ones that could hurt me or the ones I love in a significant way.
There you go. The Boeing 737. A lot of people agreed with you, Mike. We must have a lot of travelers on here. I heard a lot about that one as well, but I also heard about the FTX collapse. So they were our top 2. So they're also 2 of the ones we talked about. So I expected them to be as well.
So we're moving on to what for some of you might be the part you signed up for this webinar for. For many of you, it may not be, but it's time to dig into the meat of the AICPA Code of Professional Conduct, and this is an area that if you have joined us in our previous, as Janice said, we've been doing this for the better part of 10 years, and most years we actually do cover in some way, shape, or form a few minutes on the actual Code of Conduct, and so before you sit back and say, didn't you talk about this last year? The answer is yes. And while the interesting stuff that we may talk about today is in the stories, and the engaging items, I think, will be later on when we talk about some of the ethical questions you should be discussing in a leadership team. At the end of the day, we have to boil down some of this presentation to an annual reminder on the rules and the principles that guide our profession. Reality is that we are offering ethics credits, and so we do need to talk about the AICPA's rules and regulations around ethics, and so we're going to cover this. If you joined us in previous years, some of it will sound familiar, but studies do show, and I'm quoting our friends at Dale Carnegie here, that you need to hear something at least 7 times before it really sticks with you. So spend a little bit of time, the next maybe 8 or 10 minutes on the Code of Conduct and refresh how it's organized, what it looks like. So First thing to understand is that when the Code of Conduct in its current form was issued and released, it was broken down into a conceptual framework approach that's broken into 3 parts. And those parts are really specifically driven towards what you do in your profession. So when the new version of the Code of Conduct was rolled out many years ago now, honestly, there was a acknowledgement that if you're in public practice as an external auditor, you have different things that face you, different ethical issues or conundrums that present than if you're on the other side of the table working in a corporate accounting department or in an advisory side or as a tax preparer within a large organization. So they broke those 2 up and then realized that some people don't fall in either of those buckets. They're either retired or between jobs or doing something different for a period of their life and retaining a active license or even an inactive license. And so they created a 3rd section, which doesn't have a whole lot in it, for retired and unemployed individuals. But it's really driven to sit back and say, what do I do? What's my role in this profession? And you'll know where to go in the framework. So it's broken down by a framework and interpretations setup, and it's organized in a fairly intuitive way and really drives you into this idea of line of business. But then in each of those lines of business, it is broken down by topic and subtopic. So Janice, if you could switch us over to the next one. The topics are not really driven to answer every question you have. So I want to focus on this idea as we have this conversation around the fact that it is a framework. It is not a question and answer, and that's what the current code replaced. The current code replaced a code that was, if you have this situation, here's what you do. If you have this situation, here's what you do. And reality is, as this world evolves very quickly, there was no direct correlation to real life experience for 95% of the situations that were in the old code. So it's organized to let you work through issues that you face, focused on some key areas around what you do for a living. And then there are some examples, there are some specifics, but it's not designed to cover every situation. It is designed to give you a roadmap to follow to solve the questions you have and the problems you have. So before we get into the details of what is in each subsection, there is a preface. And the preface is relevant to all members. And it lays out 6 key principles that drive the ethical framework of our profession. And these are the things that the rest of the document, and it is a lengthy document if you go read it, the rest of the document is really founded on the preface, the 6 key principles that guide our profession. So the responsibilities principle, all members should exercise moral judgments and sensitive professional judgments in their activities. So what is our responsibility as a profession? The public interest principle, acknowledge that what we do is to protect the public interest. Whether you are in public accounting as an external provider of audit, tax, or consulting services, or you are sitting in a corporate accounting department, whether you are an accounting clerk or a chief financial officer, our role is to protect the public interest and honor the public trust. So that is a significant guiding thought through this conversation. Our integrity principle, right? If you either have integrity or you don't, we can do all the ethics training we want. You can check the box, right? The idea of check the box on compliance versus create a culture of compliance and ethical behavior. The integrity principle says we're going to do the right thing because it's the right thing, not because we have to check the box that we did it. Objectivity and independence, particularly significant for external auditors, for those in public practice, but also significant for those in corporate and governmental accounting. Are you stepping back and being objective in your decisions? And we'll talk a little bit more about that as we go through some further conversation, but it's something we've really hit heavily on in some of our prior webinars where we've done case studies and talked about lack of objectivity because of how you're approaching evaluating work that you did. So really important for us to step back and be truly independent, not just in appearance, but in how we approach what we do. Those are the first four. The final two are our due care principle. Are we striving to continually provide high quality services? Are we slowing down even on the things that are routine and straightforward? Are we making sure that we are taking the time and putting the energy in to do things the right way? And then finally, scope and nature of services, particularly for those in public practice. It is very easy to have a wonderful client relationship and do wonderful, tremendous work for the client, and the client to say, I need your help with this other thing, and we want to be the best solution for that client. But reality is there are things that somebody in public practice needs to step back and say, I'm not the best to do that. And so scope and nature of services is really stepping back and saying, am I the right one to do this for you? And the highest integrity is for me to say, I'm going to introduce somebody else and put my relationship a little bit on the line because they could do the other stuff I do for you. But really stepping in and saying what is best to protect the public interest and to serve my client the best may not be for me to do the work that you're asking me to do. So those 6 principles in the preface are really guiding and influential through the rest of the code. And once you get past those, this is where you get into the members in public practice versus members in business, and then it gets into more detail. When you provide a test services, the rules are a little different when it comes to independence requirements and things like that than it is if you're providing tax services. So as you're following with me here, you'll understand that we're getting into some nuances, and the best answer is for me to say what I'm about to say. Janice and I are not going to go into any more detail than where we are right here. Best answer is for you to get a familiarity with how it's structured by logging into the AICPA website, looking at the Code of Professional Conduct. And honestly, if you go to your state society, most follow the same template as the AICPA code. So they either adopt the AICPA fully or they have one that looks very similar. So you can go to your state society as well. But your best answer is to go look at it and understand how it's structured so that when you are faced with a question, you have the ability to answer that question for yourself and know where to go. So we'll close here on this idea of a conceptual framework. I mentioned that on the front end of this section, and I just heard out of a lot of folks listening in on this, about 3/4 of you just did the sigh of relief when I said we're going to close this section on this, because you want to get onto the more interesting stuff that Janice is going to. But the conceptual framework, right? I mentioned earlier the old code was, here's a situation, here's your answer. The new code is really driven around these principles and the framework of a threats and safeguards approach, which says if you take a step back and you identify the threats and you look at what you're facing, and we all face decisions on a daily basis. Some we don't have to pause and think about because they're easy and obvious, but we face situations where we have to step back and say, what is the threat to my compliance with the rules? Or I'll say it more appropriately, what is the threat that might prevent me from doing the right thing? Then we evaluate the significance of that threat. And if that is a significant threat, which frankly, if we're pausing to think about it, it is a significant threat, we have to step back and look at what safeguards are in place to eliminate or reduce that threat. So this is a concept that for those of you who have come through an audit role, whether internal or external, or if you've ever been involved in risk management or doing risk assessments of your organization, this is a very simple concept that you're comfortable with. Evaluate the risk, identify how significant it is, and determine a path forward and how I minimize, reduce, mitigate, avoid, accept, right? So it's a very familiar concept. The same thing in an ethical situation. We have to step back and make sure we're putting the right safeguards in place to reduce those threats to an acceptable level to allow us to continue. So we put that in a very simple graphical framework on the next page. So this is exactly what I just mentioned. Again, very, very similar concept to a traditional corporate risk assessment. What is the threat we have to deal with? How strong and significant is it? And what are the safeguards? And from an ethical framework perspective, if we can get comfortable that the safeguards in place are of such significance and power that they reduce the impact of that threat to something I can live with, then let's proceed. Let's go ahead and do what I needed to do and have the right safeguards in place. If I can't get there though, and this is the hard part, if I can't get there, we need to say stop. And in all the frauds that we had on the slide and that we mentioned earlier, at some point there was a checkpoint where somebody should have said, we have to stop, or we have to communicate something we're not communicating now. And so the hardest part of this whole process is not understanding threats, not understanding their significance, not looking for safeguards. The hard part is saying no when we're faced with that point where we should be saying no. So you might be asking yourself, Mike, before you move on to the next thing here, what's a safeguard? And I'm glad you asked that question. So let's talk about what a safeguard is. A safeguard is simply a checkpoint in place that can eliminate that threat, or if not eliminate it, at least reduce it to an acceptable level. There are really three types of safeguards. There are those that the profession creates, or legislation or regulation. So they're safeguards that are put on us by an outside body. In our space as CPAs, there are a lot of safeguards driven by the profession that we need to really focus on and think about. But there are also safeguards created in governmental entities on how you approach things. So it's really an outside body telling you you can't do something. Then there are safeguards that are implemented by the client or the person on the other side of the table from you. So I think of an example in here, maybe many governmental entities fully prohibit meals and entertainment from vendors or gifts from vendors, even if it's as simple as I want to go down to the local sub shop and have a sandwich with you. Many governmental entities say, we're not going to try and define a line. There's no dollar value that's okay, just don't do it. So a client or an entity may create that. And then others are implemented for those of us in public practice by the firm. And that really is saying, you know what, the rules say this, but for our organization, we're drawing the line right here, and this is what you can and can't do. So safeguards are things that can come from various sources, but the point is there are checkpoints to make sure we're doing the right thing. So with that, I think I managed to cover that in the 8 to 10 minutes that I promised I would, maybe even a little quicker. So Janice, I'm going to kick it over to you to wrap up the discussion on the code, and we can move into the rest of our conversation.
Yeah, the good news is we're almost done with that. But I think before we move on, step one is to identify the threats. So I just want to touch base briefly on what the 7 threats are. So they're listed here as your adverse interest threats. So that focuses a lot on objectivity. And you think of things like, are you involved in a litigation, or are there close relationships there? Advocacy, like there could be employment considerations, bonus considerations, like are you thinking in a way that you're advocating too much for the company or the company you work for or your client. Familiarity, are you too sympathetic? Are you too accepting of what they're telling you? Have you worked there too long? Are you too close to that client in an external relationship? Management participation, so we serve our clients. This is the only one that is unique to outside service providers. So are we helping and supporting management too closely and acting like we're management? Self-interest. So is there financial benefit? Are there bonus programs? Is there ownership? Are there things you could be doing that you're not maintaining your ethical standards and that professional code of conduct? These are all things that should be raising a red flag that you're saying, am I able to effectively act in an ethical manner? Not just checking the boxes and following the rules, but am I creating that culture of wanting to act in an ethical way? Self-review. This comes into place a lot with internal auditors, but also external auditors, but others throughout your organization. If someone has to review that bank reconciliation or there's a control, you cannot be reviewing your own work, or those covenant calculations or that bonus calculation. There can be all sorts of examples. And then undue influence. Is someone too aggressive, too dominant, too threatening? Is there too much pressure being put on someone to misstate something, to alter something? So when I look at these as a whole, I mean, you can look at, in the case of McKinsey, I mean, certainly, and they wanted to inflate revenue and inflate sales, and they were doing a great job at helping their client, but maybe a little too much advocacy in that case, and in supporting them. And when I look more or at Boeing. There's a lot of advocacy there of we need to push this through. We need this 737 on the market. We need to increase sales. They also think of undue influence. Where was the investors? Where was the board? Were they putting pressure on management? Get this to market. We need, push this out there. It's close enough. You have no idea what those internal pressures were. I'm guessing, and the book isn't out, as Mike said, so we don't know yet. I look at the E&Y case, self-interest, the ethics case, and cheating on the exam. I need to pass this exam. This is my career. We want our employees to become CPAs. I mean, we want this to happen. Do we want them to cheat? Well, no, not necessarily, but I do like the outcome of CPAs and people getting their education credit. So there is a self-interest there. FTX, I could see all of those with revenue, self-interest, undue influence. I mean, we're guessing a little bit, but you can see a number of those threats in those cases. That's all I have to say about the threats, but certainly a lot of ways you can see red flags coming up. We provided here the toolkits and resources that are on the AICPA's website. This is a great reference for you that you could go look up some specific things that if you think you're having an issue, go through the framework, look at the threats, look at the code of conduct, but these can also help you with some more specific examples. Or if you're questioning something and say, you know what, this may not be right, use these toolkits. Anything you want to point out here, Mike? Anything you've used or want to highlight?
No, not on those. I think let's move to the polling question and we can ramble a little bit about some other things on my mind, though.
All right. Well, here is your next polling question. Which is more important, following the rules or doing the right thing?
So while our folks are answering that question, Janice, the one thing I just was going to weigh in on when you talked about the 7 threats and the undue influence threat in particular, I think there's a thought process and a mindset that undue influence is I think you mentioned it's somebody sort of demanding that you do something or move something forward. But the thing that comes to mind that I want us all to think about as well is sometimes we think there is undue influence when it's not actually coming from above, and we're afraid of what might happen if I do X, and so I want to avoid the conflict. And I avoid the conflict because I think there's undue influence. So sometimes there actually might not be undue influence, but there's fear of repercussions, and so I might argue undue influence, but it really wasn't there. So we need to make sure we educate our teams that if you're worried about it, ask the question, right? And don't just assume that either A or B is going to happen.
I think you're right, Mike. Conflict is not always a bad thing. You should have professional conflict, but you want to know you have an environment where people are free to disagree. Right? That is a healthy work environment. So in a professional way, right? That's always important. Yeah. But here's our answers. A kind of split between doing the right thing and both being equally important. But I could see it could also be a trick question, right? So you wrote this question, Mike. Anything to say about that?
Nope. Nope. We're going to keep moving.
We like CPE questions where there's not a right or wrong answer. We just want to know what everyone's thinking. So that makes it more fun. So, and we do know we have some questions coming in. We have some chats coming in. So we might have a few minutes for that at the end. So we certainly like that. So keep that coming. All right. We are going to move forward to some current trends in enforcement. So I said we were going to come back to this one in a little more detail. So this is a little bit more about the Ernst & Young paying the $100 million fine after the auditors cheated on their ethics exams. So I just wanted to provide a little more detail on this one. So this was, it says right there, the largest penalty ever imposed by the SEC against an auditing firm. And a lot of this is about E&Y's not acting, their failure to act. Their failure to stop this practice from happening, because this goes to tone at the top. You knew it was happening, and you certainly, I said, you could see those threats there, that there's a self-interest threat. We want CPAs. We would like them to pass the exam, and what's the harm? We end up with 49 or 50 more, depending on which article you read, of CPAs that are passing this ethics exam. So ironic that they're cheating on the ethics portion of the exam. But they also said they went further, that the firm misled investigators, withheld evidence. Every time I see that, I'm like, how does that help anyone? Like, you see this in so many cases, and that tends to come out. But they violated different rules and the integrity of the profession. They say because of those following steps that they took, how they didn't do anything to stop this from happening, that the penalty is double the amount that KPMG paid for similar allegations in the past, because E&Y tried to hide this. So they seem to have gone one step further, and it seems like their tone at the top really allowed this to happen and to continue happening. And then the fact that it also happened in some of their internal courses and their internal CPA just led the SEC to make this fine so much greater. So the lesson there is you can't afford to not act or to turn a blind eye or to say who's really being harmed. The profession definitely does not tolerate that. And like Mike said, like, people didn't die in this case. You didn't get people addicted to narcotics, and you didn't have a plane crash, but you are certainly violating the profession. You're certainly not holding up the integrity and the standards that the profession looks for. You violated the rules, yes, but you also are not creating a culture of integrity and a culture of ethics. The second one also goes to culture here, and this was also interesting with the big four accounting firms in Australia. And I read dozens of articles on this, but in Australia, the big four firms have worked with the Australian government, and this spanned over a decade, where they're providing all of these consulting and advice, and they're working in all these different industries, where they're working with education, they're working with the healthcare systems, and they're working with all of the businesses, and a lot of them were helping to write the new tax laws in Australia. And then they were taking that information. PwC is specifically cited here because they were the ones that came out publicly, but they were saying all of the big four firms were involved in that, and I'm sure others as well. But then they were taking that insider information and helping to write the tax law and turning around and going out to corporations and consulting with them and basically selling that advice. And at the end of the day, there was billions of dollars that these firms made on leaking the Australian government's tax plans all over the world. And it happened over a decade. At the end of the day, PwC in particular was targeted here and was, I guess, deemed to be the most at fault. And Australia's CEO was ultimately alleged to have been involved in this scandal. The CEO was terminated, PwC Australia's CEO. They turned over their leadership there. Again, this is a little bit more like McKinsey. You say, well, we made a lot of money and this was good business. It's no, you violated the profession, you violated the law, you breached confidentiality, you were selling trade secrets, you were trading information that was not at liberty for you to share, and you took this information of working with the government and shared it with those outside the government. I mean, this is just plain wrong, and several of these firms, not just one, took this information and did it. And if you go look this up, it is definitely not just one firm. It's not just one area of government. It's many, many areas. So some of the implications here is that, well, the CEO was terminated and leadership was changed. PwC Australia sold its government consultancy practice for $1. That sounds like that's a pretty significant implication. New CEO was brought in, and there were many new policies put in place, new governance, new structure, new rules, new things to oversee the ethics, the education, and how they're going to work with their clients moving forward. Since PwC was named the most in these articles, I honed in on them, but they were not alone in these practices. So again, going to tone at the top, revenue, but here in these current trends, I don't know if there's anything you want to say on those two cases in particular. It's a couple of points here, Mike. Anything to summarize and highlight?
No, not on those in particular. I had a conversation just yesterday with one of our colleagues around this idea that so many good things have been screwed up by people who got greedy by expanding the good things beyond what they were originally intended for. And really, we were talking about some of the things that the IRS is scrutinizing now. And the IRS is scrutinizing them because they were really good solutions when applied properly, but somebody, and often many somebodies, and often many of those come from worlds like ours, where, like these cases Janice just went through, the one Janice just went through, somebody decided I had a revenue opportunity here if I do something maybe that's not quite right. So just, it's a relevant topic, and I think that happens a lot. Something good is corrupted because somebody wants to maximize the economic return on it, and so they stretch it and stretch it and stretch it to the point where we have newspaper articles about things like this. So just disappointing. So the only thing I want to touch on this particular slide is just this idea of self-regulation in our industry. Our profession continues to evolve, the landscape in which we serve continues to evolve, and our profession, driven by the AICPA, is trying very hard to retain self-regulation. So while the existence of the PCAOB provides external oversight for firms that audit public companies, largely through peer review, licensure requirements, CPE requirements, the way that our profession follows up on complaints and allegations, some of the things we've talked about on other webinars, our profession stays and wants to stay self-regulated, and to do that, they will, and we will continue to drive further enforcement, and there will continue to be more regs and more scrutiny and more digging. And the center point there really is about this bridge from doing the right thing. So the PCAOB formerly would say, I'm going to review a firm and say, did you do all the right things in doing your audit? Meaning, did you check all the right boxes and follow all the rules? And now we're shifting into an idea of, do I have the culture? And it's so subjective, it will be very interesting. But our profession is going to continue to drive into, is the culture of a firm built to do the right thing? Because just checking to make sure we're doing the right thing and checking the right boxes is no longer enough. So yeah, it's just really going to be an interesting evolution. I don't know if you wanted to add anything on that, Janice, before we keep moving.
No, I think that's good.
So this slide, the very, very tiny slide, I invite you to download the slide deck and look at closer. And we're going to keep moving just in the interest of time. But it is just a simple snapshot of ethics enforcement. And one of you is squinting and saying, does that say 2020 and 2021? Yes, they have not released similar data for 22 and 23 yet. But just something interesting you can take a look at in your spare time when you download the slides. But let's move to the disciplinary actions section. And the last item we wanted to touch base on is just some of the themes that we're seeing as you evaluate the AIC disciplinary actions. So if you are subject to a investigation for an ethics issue, unfortunately, you're not going to like this fact, but it's all out there for people to go read. Now, if you are not, like I hope all of our participants today are not subject to any ethics investigations or enforcement, the good news is for us is if you want to, you can go read about them either on AICPA website or state websites. So if you don't have any dirty laundry, great. If you do have some dirty laundry out there, I'm sorry, but we're all gonna go read it in our spare time. So just for some information, so you know where some of the themes we're seeing are right now, and you can see them on the slide. I won't go through them all. The only ones I'm going to comment on, the first one that we're seeing in terms of a theme, and I don't think we always think of this as an ethical issue, it is failure to comply with CPE requirements. So how often do we get to the end of a year or even to license renewal and say, oh shoot, I didn't get all my CPE and it was an accident and an oversight? And there are a number of disciplinary actions against practicing CPAs because they failed to comply with CPE requirements. And I know that sounds a little severe, but reality is it's part of our profession is to get the education the profession says we're supposed to get. So it is a discreditable act. So just something to pay attention to. The other thing is the fourth bullet point that I wanted to comment on regarding, this gets to the scope of services conversation we had a little earlier. You will see a significant number of disciplinary actions around firms or CPAs individually who did practice in areas that they were not competent to practice in. And so primarily that is ERISA and Yellow Book, although I believe we're going to start to see with some of the focus of the AICPA this year, we're going to see SOC added to that. so service organization procedures, but ERISA and Yellow Book work. Firms should not be working in high-risk areas, and yet it happens time and time again. So just wanted to highlight a few of those areas. You can see the rest on your screen. So Janice, why don't we move into the final part of our discussion, which is, in my mind, really getting into that interesting gray space between checking the box and developing that culture of doing the right thing. So we'll spend our last 10 minutes or so here talking about that theory of building the right corporate culture.
Nice, we will do that. Most people here don't want those CPE violations, so that's why they're on this webinar. So creating an ethical culture, which is a lot of the focus, we don't want to check the boxes. So a couple of takeaways here from all the things we talk about is you've got to lead by example. So you have to create that space where you are living, breathing, and demonstrating your ethical culture every day. But not only that, you have to encourage it. You have to say, and sometimes I think you have to focus on the little things. You have to say, this isn't just a little thing. This is formative of our culture and things we do and don't accept. So sometimes I'm like, wow, we're talking about this. And I was like, yes, we're talking about this. Thank goodness someone brought it forward, and we're making sure this doesn't turn into something bigger, because we want to do the right thing every day. And I want to make sure that we're never questioning whether or not we're doing the right thing. So creating that space and encouraging ethical decision making. And providing meaningful feedback. So I think sometimes this can easily get skipped, but creating accountability, telling someone when they're doing well and telling someone when they're not, and that constructive feedback, being direct and empathetic, but helping them grow professionally and saying, you know what, we can do this better, and this is how we do it correctly. This is how we be competent in our jobs. This is how we make sure we're not getting disciplinary actions because we're doing work we're not competent at, and making sure that everyone around us is competent at their jobs. And that's really important too. So when you sit there and go, oh, I don't want to do that performance review, or, oh, this is an HR thing. No, it's a professional thing, and it's an ethical thing. And taking the time to have those discussions is so important, and it's driving accountability. The next one, combating workplace bias. So making sure there's no implicit or explicit bias. We're all usually aware of explicit bias. Hopefully you're absolutely not tolerating that in the workplace, but being aware of some of that implicit bias and making sure you're thinking of things from different angles and different perspectives, and making sure you're fostering meaningful interactions and mentorships and teamwork. We call that we, not me here, where we want to be inclusive of everyone at our firm, and making sure you're thinking that through. And again, creating that environment where you can have the meaningful dialogue. And giving your employees a voice. So what are all the different ways you're getting meaningful feedback? Through direct conversations, through surveys, anonymous surveys, through interviews, entrance interviews, exit interviews, regular throughout the firm. Again, you might say this is HR stuff, but it's also ethical things as well. But maybe more importantly is, how are you reacting to that, and what is your organization doing about that? Anything, Mike, before I move on? And authentic leadership style, so principle driven, reflecting your values, principle, and mission, and knowing what your core values are and how you're implementing them every day. And then taking accountability, so making sure you're fostering that ethical work environment every day, and making sure that you're not making decisions that will just drive the bottom line, or financial decisions like we saw in a lot of those cases, or things like, I want you to become a CPA, but I want you to do it the right way and the honest way and the ethical way, and we're not going to cheat, and we're not just going to drive revenue. We're going to do things the right way, and we're going to hold people accountable to that. All right, Mike. I love these questions, but I feel like we should do our CPE question and then come back. What do you think?
Yeah, we can absolutely do that.
All right, so we're going to launch our last CPE question, and then we'll go back to those questions. The most difficult part of creating an ethical culture is?
So as our audience is answering this question, I think I'll introduce the idea behind this slide. If I'm bold enough to say, out of all the slides in today's presentation, if you're going to take one back to your leadership team this is the one I would hope that we focus on. And so I hope you all download the slides, and I hope you look into some of the frauds that were mentioned. I hope you remind yourself on some of the tools. I hope that you go into the AICPA's website and look at the code of conduct and start to understand it and how to dig in. But at the end of the day, I think the most valuable thing that you can do is not sit through an hour-long ethics webinar and get your credit. The most important thing you can do is to take meaningful discussion points back to your leadership team in your organization. And that's really what these questions that we're going to mention are driven by. So we'll close out that polling question, and then if we can swing back to that other slide. So yeah, workplace bias is the most difficult. I would understand and believe that. So we're going to rewind. What's that, Janice?
And it's not surprising.
Right. So if we had flown through all the other slides, I think Janice and I could have a wonderful discussion on some of these points, because I know we both have opinions on them. But rather than us having, another half hour of time here and losing most of you, let's just focus on the questions and some encouragement to take these back. So how can an organization shift its mindset from the what to the why? Really critically important for your leadership team to wrestle with, because we have to do the right thing. We have to check the boxes. We have to file the right documents. We have to get things right. And so a lot of times we're checklist driven and we're process driven, and we follow the process. And if we follow the process, we get to the end of the day and we know we have all the right things done. But how do we as a leadership team, and I would encourage this discussion, step back and say, what can we do to make sure people understand why we're asking them to do all those things? Second one is, what can we do today to influence a shift from the checklist to the do the right thing mentality? So first is, how do we shift the mindset of the organization? But second is challenging your leadership team with 1 or 2 immediate actions that would help start that journey for you and your organization. Third is this idea, the thing we just talked about in the slide, or the polling question. What are the biggest challenges that we're facing? What are the things that we're going to struggle with in this journey? Or if you already believe you are truly a culture of ethics-focused mindset, what challenges will you face on retaining that culture and communicating properly? Bringing in new people into that culture always creates a point of potential conflict. And the last 2 questions, how can a staff member who's not a leader influence this? As leaders, you have to ask that question and understand that there's an answer there that means you might need to open up your ears a little bit stronger and listen a little bit differently. And then investments that can be made, right? It's budget time for many organizations, getting started on the budget process over the next 2 months to think about what next year looks like. We might need to spend some money to create a better, ethically enhanced culture. What would be the best places to spend that money? Because the answer is not we shouldn't spend money. The answer is, where should we spend money? So just a couple things I would encourage your leadership team to talk about. Janice, anything you want to dig into a little more on any of those, or other questions that have come to your mind?
I mean, I just think biggest challenges in the culture of ethics mindset. I mean, bad bosses can absolutely destroy that. So you certainly don't want to keep them around. You want people that are always going to do the right thing. And when you see someone that's not, I think addressing that, the sooner the better, that feedback, that accountability. I just think you need a culture that can't be tolerated. And then staff members throughout the organization, that culture of see something, say something. And you don't want to create a culture where people that come forward, you're like, oh no, here we go again. And you want to be like, thank you. Even if there's not anything to be done about that, you want to listen, you want to be appreciative that individuals are coming and talking to you, and you want to say thank you. Because when someone comes forward, like, that's a gift. And you want to be able to say, I appreciate that you came forward, and maybe it's not something you're going to act on now, or maybe not everyone agrees this is something we have to act on, but they're coming forward to tell you, I have a concern. And that's a big deal. And I think that's really important to appreciate that.
Yeah, very much. Well, it is about time to land the plane on this presentation. And so here is how we'll land the plane. We'll just end with some final words. And those final words are fairly simple, and those themes have resonated through our entire conversation of the last hour. Know your weaknesses, understand that staying compliant isn't enough. You can't just do the right thing, you have to do it for the right reasons. Don't blindly follow standards. Again, don't just follow the rules, understand why and how it's critical to follow the rules. Be skeptical. Don't accept what's put in front of you. Communicate your concerns. And as Janice just said, even more importantly, foster an environment where others can communicate their concerns, listen to them and respond to them, and encourage more of that behavior. I love the one, you can sell your services daily, but your reputation only once. You make one significant ethical mistake and it is extraordinarily difficult to ever recover from it. So tone at the top matters. It is absolutely critical in our evolving world that we're working in as CPAs and representing a profession that tries to do the right thing, that we influence culture in the organizations we work in, whether it's on the public accounting side, governmental side, corporate accounting, or you're an in-betweener. Influence your culture to do the right thing and understand that you have to follow the rules, but it's just simply not enough. So we appreciate you joining us for today. If you have other questions, and I know there were a few questions and comments posed that we did not get time to dig into, we thank you for those comments. But if you have any other questions, please feel free to reach out, and Janice or I will be happy to get back to you and have a conversation about things that might be on your mind. Just for your information, a recording of the presentation will be posted in a few days. And for those who requested CPE and answered that first polling question, yes, your certificates will come out sometime in the next 2 weeks. So final thing is to remember to register for our next webinar on September 12th, which is Investing for Success as a Nonprofit Organization. And I would argue that even if you don't work at a nonprofit organization, you'll learn a thing or two by sitting in on that one. So thank you again for joining us. Have a great rest of your day.
Thank you.